requirement, then they may have an advantage going through a larger bank. If they're looking for someone who can maybe sit down with them and spend time consulting with them and providing some added value, getting to know them on a personal level, and then caring about helping them, then they may choose to go with a community bank.
Okay. Now say that you're starting a small business and can't qualify for a loan. What alternatives do people like this have?
Well, I think from what my experience has been over the years, the biggest stumbling block for someone is maybe their lack of capital to start a business. Mm-hmm. Because again, you need to have money to start the business, you need to have money to finance the business. Mm-hmm. If you're going for a loan, the banks are looking for collateral to back it up, secondary source repayment, or maybe they're looking for you to have enough net liquidity in your personal net worth to put money in the company to back it up if the company was having a business reversal. So in those cases, it's probably a good idea to start out small or maybe part-time. Let's say you're a machinist and you want to start your own machine shop. Well, maybe you start out with one piece of equipment, working out of your garage part-time while you're still working full-time somewhere else. And then you learn how to go out and get business on your own, get a customer, get a couple customers, and then you start building from there. Then you get to a point where you can hire someone else to come out on board with you. Then you get to the point where you're generating enough revenues where you can then make that your full-time job instead of your part-time job. Mm-hmm. And then sometimes if you're limited with capital, you can go to friends and family. The days of going out and borrowing $100,000 on your credit cards are not like they were before. Mm-hmm. And that's a very expensive way to go. And that can help some people, but it's not as available as it was a few years ago. Okay. So you can always look at partners, bringing in a partner into your business that might have some capital. But again, there's always a trade-off. If you have a partner that is putting in more capital than you are, they may have a better, higher ownership interest in the business. Mm-hmm. But a 30% interest in a business may be better than 100% investment in nothing.
Yeah. Okay.
Right.
Now, what if a person has an idea for a new business that they want to start? Is that just sort of a lost cause? Or?
No, I think the first thing, though, you really want to do in that case is to sit down and really work up a business plan. And in this business plan, you're going to indicate, you're going to note how are you going to market this business. You're also going to look at look at the revenues that you're expecting, the expenses that you're expecting, and then where's the money going to come, the startup capital going to come, and the financing going to come. Is it going to come from personal, friends, family, or is it going to come from conventional lenders like banks? And then once you have that part of it, then it's a matter of going out and talking to the various sources out there to see and compare to see what your options are.
Right.
For the financing sources.
Okay. Part of what we talked about related to, well, first of all, that the banks, for the most part, aren't looking for these new business type of opportunities as far as, a startup type thing, because again, you were talking about the margin, that they don't feel that they can take that kind of a risk.
Well, it is difficult to get financing until you've been in business at least 2 years. Mm-hmm. So until you can show a track record of generating revenues and profits for at least a year and a half, 2 years, it may be a matter of using equity instead of credit to start up the business. Mm-hmm. And again, once you do have that track record, then you can come to the bank. You can show that Here we're generating revenues, we're growing the revenues, we have good margins, our condition of our balance sheet is not highly leveraged, we are growing, we need some working capital to support that growth.
Okay. Now there's another thing, and that is sort of the understanding. We were talking about the business plan, which is one part. One is getting it on paper. The other thing is understanding that an awful lot of people, when they start a business, really what they're trying to do is create a job for themselves. And they don't understand that that a business is different from having a job.
Yes, in fact, I think the key point you're making here is that a person that's starting their own business needs to know what they're good at, and they also need to understand what they're not good at, and then be able to go out and get people involved in the business that can support them in the areas that they're not as strong in. For example, let's say you're that machinist who want to start your own machine shop, and let's say you're very good technically as a machinist. Well, if you don't have that experience in developing business and getting clients, and then knowing how to bid the jobs properly, you may bring in a partner or somebody who can help you with that part of the business. Mm-hmm. Most small business owners don't have a background in accounting. So it's critical for them to have a good bookkeeper, a good accounting manager, a good controller, a good CFO, somebody in their business who can work with their accountant to help them produce the timely and accurate financial statements that and then that person can help the business owner through understanding the financial information that they're looking at, along with maybe a good experienced CPA and a banker that will sit down and share industry information with them so they can look at, well, am I striving for the right gross profit margin? Well, how do I know? Well, a relationship banker can sit down and provide industry information on your industry and say, well, if you strive for this level of gross profit margin, you'll be within your peer average for your industry.
Okay, John, we're all out of time. So I want to thank you again for joining me today.
Well, thank you.
Hopefully we'll have an opportunity maybe again to talk about some business finance issues at another time. Folks, now you hopefully have a little better idea. It is challenging getting financing these days, but at least you got a clue. And I hope that you can join us next time on Financial Insider Weekly.